Welcome to the #InvestThis podcast, where the secrets for real estate investing are revealed. Now, here's your host, Scott Bauer.
Welcome, everybody. This is the 12th episode of the #InvestThis podcast. I am your host, Scott Bauer. And today I have Allison Kirschbaum. She is the CEO and CMO of Luo Media Group, a digital marketing firm specializing in making real estate investors into industry-dominating thought leaders and attracting qualified investors to real estate syndicators and their deals. She's based out of the greater Denver area. Allison, how you doing?
I'm doing great. How are you, Scott?
I'm just doing fantastic.
Awesome.
You want to go ahead and give the listeners a little bit more about your background and kind of what you're focused on now?
Absolutely. I've been an entrepreneur since I was 9 years old, had very entrepreneurial parents who encouraged me to learn business skills like cold calling and direct mail and selling in front of a group very young. I was leading teams of salespeople for the largest currency exchange brand in the world, all across the state of Texas by the time I was 19, and then took that entrepreneurial spirit back to Colorado, my home state, to raise my first private capital from a private investor who was neither friend nor family, very important. By the time I was 22, started buying rental property, and that quickly morphed into real estate private equity funds and creating a proprietary system of not only attracting investors, but marketing for them through mainly social media, which is obviously a very powerful platform that a lot of, especially small real estate entrepreneurs, overlook. So that's led into the work I'm doing now with Luo Media Group, helping not only real estate thought leaders get their message and their very important words out to the world, but also helping small and beginning real estate private equity funds get their message out to their investors and attract qualified people to their deals.
Awesome. So right off the bat, lots of questions. So, I mean, is it primarily social media? Is that your primary thing that you go to attract these different investors and different, people to the funds that you're working with? And do you just work with one fund, or do you onboard different funds that you're trying to help raise capital for?
I'm going to answer the second question first. So my team and I do work with multiple funds at once, just because there are lots of people that need our help. No reason to turn them away. We have the bandwidth, we have the resources. So we work with multiple funds at once, but that doesn't mean that they're all on the same timeline. Say a promissory note fund that wants to churn their capital might need to do a small raise to begin with, and then keep churning that raise of 2 or 3 million over the long term, over a couple years, versus a private equity fund, specifically just equity, might need to do a raise of 10 to 15 to 25 million all at once. They need to push it very hard for a couple of months, and then there's not as much for us to do anymore. So all of the funds are going to be at different stages. And in terms of the way that we attract investors to these funds, it depends on the needs of the fund itself. In some cases, if the syndicators have a very broad pool of people that they know personally, maybe they're already an expert in their right, in their state or in their niche. If they already do some traveling or speaking or something like that, we can leverage that knowledge to be able to pull in more personal connections for them from their larger platform reach, or we can focus on social media, sometimes even content sales. We can actually help people make money off of the marketing that they're doing versus just constantly paying to do marketing and bring investors in.
So, what is the size and scope of the companies or the individuals you're helping raise? If it's a private equity fund or just a small fund trying to raise capital, I mean, are these large companies? Are these private individuals trying to raise money for a multifamily deal? What does that look like?
I'd say that they're probably more on the smaller niche boutique kind of side in terms of a private equity fund, but it's rare that it would be a single individual just raising money for a single multifamily or something like that. The people that we work with almost unilaterally have 506C Regulation D funds, which is the very best way, and in my opinion, the only sane way to go about raising capital in this day and age, because that's the only type of private equity fund, except for regulation crowdfunding or for some very large types of funds that are typically cost prohibitive for small investors. The 506C is the only type of fund that will allow you to do mass advertising through social media, through the things that we're best at. So it's actually not in our purview to be able to just go out and put a deal on social media if an investor doesn't have a 506C or a regulation crowdfunding offering at this point.
Okay. So, and I kind of want to stop you / back up a little bit because a lot of the listeners out there may not know necessarily what a 506c really is, or even a Reg D, and what I guess they would need to do in order to get one of those, or to be able to raise money. So, can you elaborate on that just a little bit?
Absolutely. Yeah, that's obviously a topic that could take up an entire other podcast, but I'll give you the I'll give you the cliff notes. Yeah. Regulation D refers to a subset of types of funds that syndicators can use when you're raising money for not just real estate, but you might be raising money for an invention or a company, just something that requires an investor to put in money for a stake of some kind in the long term, a promissory note, equity in the company, something like that. They're getting something back for it. These funds are different than, say, Indiegogo or Kickstarter or some of those other smaller crowdfunding type companies, because you're getting a financial stake in a specific entity or something that's tied to a specific return for the long term, versus Indiegogo and Kickstarter, like most people are familiar with. You might get a product or a nice card in the mail or something like that, but you're not really getting a return on it. The types of private equity funds that syndicators can use to raise money for real estate range from very expensive, several $100,000s to do the documents, Regulation A, SEC regulated kinds of funds, down to the less cost prohibitive, in my opinion, better kinds of funds that fall under Regulation D, which is an exemption from SEC registration. There are SEC registered funds and non-SEC registered funds. And obviously the ones that are registered are more expensive, even though they can sometimes have greater reach. So and obviously there's a lot more detail we could go into for that, but we've chosen the 506c as our main purview under Regulation D because it is an SEC exempt fund, and because of the marketing capability, and because it was less cost prohibitive for us when we were starting out as syndicators for us to create one of these funds.
So when you first got started, I mean, did you said, okay, I know how to raise money, or I know some people in my network and I want to put together a fund. I'm going to go put together a 506c and we're going to publicly raise money for a multifamily deal or a commercial deal or something like that. Is that how that went down?
In our case, it was self-storage, but yes, that's basically it. We had an idea. We found a niche. I was in a partnership at that time, and still am, with some very smart people who knew how to do very in-depth analysis across multiple markets of the country for self-storage. And we found that there was a niche to be able to buy very specific kinds of property that made great cash flow for the long term, but that weren't being gone after by larger private equity funds. We found a blue ocean space, so to speak. So we didn't know where we were going to get the money from. We knew a few investors, but not a lot. We're just like, hey, this is great. We can make a ton of money on this for our investors. There's got to be somebody out there that wants this. Let's create a private equity fund.
Awesome. And clearly that turned into being something that you ended up buying, the self-storage, and you found a huge opportunity, a niche in self-storage alone.
Yes, self-storage alone. But I own a little bit of other types of asset classes, but self-storage is absolutely my favorite.
Okay. And is real estate your primary focus? I mean, obviously you're raising funds, but I guess break it down. What's your primary focus that you're doing? Is it the raising of the funds for other companies, or is it buying properties?
I feel like that's kind of an unfair question, Scott, because when you get to say that you're a C-level executive, whether it's your own company or somebody else's company, there's obviously a lot of other people working with you, either as employees or as contractors or as partners or what have you, that are making all of the pieces that you don't specialize in run correctly. Yes. And that's the case with both our private equity funds and my media group. The media group is my brainchild, my specific endeavor. I don't have any partners in that like I do in the real estate private equity funds or in the real estate world in general, but I can effectively do both because of the teams we have on both sides. So like Elon Musk, I try and break it up into, I'm going to do this on this day and this on this day, and just be a time Nazi and make sure that I can get everything done that I need to do. So it's really difficult to say which is the complete focus, because the work that I do for the private equity funds, which is mostly marketing and being the investor liaison, is so similar to what I do and what I spearhead for our clients with Luo.
Okay. Well, I can certainly respect that. And I guess my next question is, do you feel that, would it be, if you only focused on one or the other, would you be able to catapult one or the other to the absolute next level? Or are you kind of rising all tides, so to speak, because you're able to manage time efficiently and, be able to work on both different sides in conjunction with your other team members to really raise everything kind of at the same time?
Ooh, that's a thinker. I like that one. I would say that Luo Media probably has a lot more capability to go a lot higher, a lot faster, just because of the nature of real estate and of fundraising for real estate in general. The private equity funds are more of a long-term play. We don't have any funds in progress right now that are less than 7 years, and some of the funds are actually perpetual, as in there is no end date. They're
Hmm.
just long-term plays. So I would say that if I were to move a greater chunk of time over to Luo or put a bigger team together, something like that, I would definitely be able to take it to the top of the industry.
Okay. So let's say an investor comes to you and they say, listen, I want to take on this project. This is what I want to do. Can you help me raise money? Is that how that works? Did somebody approach you that way?
It can be. Sometimes people will come to me with just the seed of an idea. They'll be like, hey, I know you through so-and-so, and I want to start a private equity fund, and I hear you know how to do that. What do I need to do? It can be, and obviously I can't give legal advice in terms of what kind of fund they should definitely open or that kind of thing, but I can give them some guidance in terms of what kind of outcome they want to create. So it could be, it could start from there. In more cases though, I get connections through LinkedIn or from my speaking engagements or things like that, people who already have a private equity fund or at least have one in the works, that they're just struggling to go from the level of, these are the people I know, these are the people that have invested with me, I'm out of contacts, where do I go? To the level of, hey, I have so much investor money, I don't even know what to do with it because now I've got all these contacts coming in from social media and from all of these areas that I had no idea you could get investors from.
Yeah, I mean, I would say that would be somebody that's trying to raise money. If they're doing it the right way, maybe they get too much, they get too many people, and I guess you can never have too much because there's always opportunities out there. But that's kind of a roadblock I could see people running into. So do you find that to happen often? I mean, do you start with a client and you start raising money, and all of a sudden do you just have money pouring in? I mean, we're in an economic environment right now where there's a lot of money in the market, right?
Yes.
And people want to invest. People, the market's doing great. So have you seen that to be the case?
We have definitely seen people very eager to get into real estate investing of all kinds. And self-storage specifically, which is obviously the market that I know better than any other, has had a bull run in the last several years in terms of publicity. It used to be this very quiet little asset class that everybody kind of discounted. Now it's very popular. So I would agree with you that yes, there's a lot of money in the market right now. However, there's always money out there for a good deal. You may not be able to find it from the same people that you were able to find it from in a good market as in a bad market, and vice versa. But there's always money out there ready to go. If the stock market takes a dip, in some cases, people gravitate toward real estate. I think it depends mostly on your mindset. The world is full of money. Maybe you have to go international. Maybe, maybe you have to only go after ultra high net worth individuals and family offices. Maybe you can't look to crowdfunding or anything like that anymore. Or maybe you go the complete other way and only do crowdfunding and raise a tiny amount at a time from a ton of different people. So there's always a way to get the money. But I would agree that right now there is a lot of it in the market looking for real estate. And that obviously does help our funds as well.
Yeah. And actually, I heard an analogy or I read it somewhere a while ago that money is kind of like the ocean, right? You could go and you could take as many buckets of water out of the ocean that you possibly can, and there'd still be an ocean.
Oh, I love that. That's so true.
And that's just the same way as money. I mean, there is so much money out there that there is more money than any individual or even group of people could possibly even think about spending. And really, especially in the US, we just keep printing more money. It's sad.
Yes.
It doesn't really work, but we just keep printing more money and there's more money out there. So for the investors and the listeners of the podcast that maybe are struggling with money or, are looking for money for a project or something like that, just know that there is money out there. It's just a matter of, connecting and using your database and the people that you know in order to go find who that partner might be.
Absolutely. Your network really is your net worth. And I mean, I've fallen into that trap too, thinking, oh my goodness, there's just no money out there for this project or whatever it is. Number one, maybe you just have to realize that maybe it's not as good a deal as you thought. There is always money out there for good deals. And the second thing to realize as well is that the only way that money changes hands in the world is by the exchange of value. So if you're not getting enough money, Maybe you need to add more value. Maybe you do add a ton of value and the perception of that value isn't there. Maybe it really is just a case of your marketing. If you just aren't adding that much value, go write some great content, hire a content creator, go out and do some free speaking engagements, show the world what an expert you are and why they should invest with you. That's the big difference that I see with a lot of companies that could be raising a lot more funds and aren't. They just either don't realize what they have, or they're spending too much time looking for money instead of looking for people that they can add value to.
Yeah, I think that's a massive point. Thank you for sharing that. People get caught up in that fairly often, I think. And, you know, as a real estate investor, so you may or may not know, but I've primarily built my business on single family homes, and it's been very, very, very lucrative, and it's been very, very good.
Yes.
I love doing it. However, you know, our shift is moving into other syndications with larger types of properties. And let's say that I wanted to start a fund, or I wanted to raise money. Could you walk me down that path of what direction to go, or would you be able to assist somebody like myself in that type of a thing?
I can do what I sometimes refer to as the video game guru approach, where I can stand at the crossroads, like if you're in one of those Quest video games, and say, hey, you should go down this road. But then you actually have to have an attorney or somebody qualified to give you legal advice about how to set up that fund, walk you to the next signpost, at which time I can say, hey, now that you've done what I directed you at the last crossroads and you got firm legal advice and all that good stuff, now I can help you raise money for this thing. So I can do it in a way, but I can't do it all on my own. I'm not an attorney. You have to consult an attorney or a fund preparer of some kind to make absolutely certain that what you want to do matches up with the kind of money you can raise. But I can give guidance to the point that we're ready to start marketing, and then we can take it on from there and make sure you get your investors.
Absolutely. Yeah, I could understand you're not an attorney. You don't want to give legal advice.
Yes.
But you know, I mean, if somebody wanted to go down that road, and they wanted to raise money, and they wanted to find a way that was, you know, the right way to raise money, could you give a tip on where to start? You know, what do you do? Do you find a product first? You know, I've heard kind of conflicting strategies for this. Some people think that you go and you find the deal first, and if you find a good deal, like you just said, the money will always follow. But at the same time, what if you don't have confidence in going to find a deal if you know you can't execute because you don't know that you have the money behind you? Do you see that? I mean, is it?
I do. It's a chicken and egg. It's a chicken and egg question, because it works either way. Like, in all honesty, it works either way. However, it sounds like maybe what you're referring to there is a one-off deal, correct? Like going to find one great deal and then finding investors. Am I getting that right?
I mean, it could be done that way. Yeah. So
Okay.
if let me put this example at play. So let's say I'm going to go buy a 100-unit apartment complex. It's going to be, I don't know, 10 million. We'll just throw that number out there.
Yeah.
10 million bucks. So I want to go do that. I don't have $10 million today, but I want to raise money for that deal because I want to become a syndicator long-term. It is going to be a one-off deal, but it's going to be the first of many. So how do I approach that as an investor? How do I go out and say, okay, this is where I start? Where's the starting line for that?
Okay. So in that case, I'm going to assume that this is your first multifamily deal, that you don't have any other real estate experience, correct? Because that's a key factor.
Okay.
So if you already have real estate experience of some kind, this is how I started syndicating off of my first rental properties. I bought single family, like it sounds like you do. And I was able to leverage my experience in real estate, worming my way into a niche in the Denver market that was very hard to get into. I was able to use the example of that creativity to attract my first investors for our self-storage deals, because I was able to show them, hey, I'm already great at finding niche markets, which is exactly our strength with the self-storage fund. We were able to make a great return in our niche market in Denver. We're going to do the same in this market in Missouri or Kansas or wherever it is, So utilize the experience that you already have in order to build some kind of brand strength. As in, I am great at operations, even if you've never owned real estate before. If maybe you were great at operations at your prior company, use that as a way to create leverage with your investors. Hey, I am strong in operations. I will make sure that the operations of this property is great, and I'm going to hire or partner with X, Y, and Z other people to fill out the rest of my team. Number one, leverage your current experience. Number two, bring on people on your team, if it's a consultant, if it's an equity partner, if it's an employee. I've done all three. It just depends on your situation. And create a comprehensive bio for all of you together that shows not only that experience that you can leverage from real estate or any other industry, however you've chosen to morph that, but also show the experience of your team members. Because if you ever watch Shark Tank, or if you listen to the advice of large scale venture capitalists, they very strongly prefer entrepreneurs who have a team around them versus solopreneurs. It could be other partners, it could be employees, it could be VAs in some cases. They just want to know that the person running this company, the person spearheading this initiative, isn't a complete lone wolf. If that person gets hit by a bus, there is at least some safety that the deal will go on and they will continue to keep making money. So number two, leverage the team that you built up around you. And number three, so you're coming back to the question of whether you find the deal first or you find the money first. If you have no experience, the best way to do it is to find the deal. And yes, that can create stress. I know it creates a huge amount of fear to sign on the dotted line for a $10 million property if you have no idea where the money's coming from. However, real estate contracts are awesome in that you can always protect yourself if you can't pull the money together if you write the contract correctly. Real estate contracts, as you know, have tons of contingencies. As long as you pay attention to your contingencies and don't ever put down hard earnest money if it's your first deal and you don't know where the money's coming from, there's not a whole lot you have to lose. At the very, very least, you can chalk it up to experience and use it as more leverage for experience the next time around. If you do have experience and you do have a track record in real estate and you already have a pretty good network of both deals and individuals, find the money, at least start finding the money first. Kind of seed the field with your investors. Let them know, or your potential investors. Let them know, hey, this is kind of deal I'm going to go for. This is the kind of money that we're probably looking for, the potential returns. When I find a deal like that, would you maybe be interested in taking a look at it? So you're doing both concurrently. Does that make sense?
Yeah, no, absolutely. And another way that I approach that is, instead of asking them directly, hey, would you be interested in something like this? I kind of use a different approach to say, who do you know that might be interested in this? Because then it's
perfect.
not
Yes.
at them, and it doesn't make them feel, I guess, surrounded or pinpointed like, oh, it's me. It actually makes them think, no, that might be me. That might be me that's interested in something like that. I might want to participate with you in some sort of deal like that. Plus, also opens up their mind to who else they may know. So that's huge. That's huge. Thank you for sharing that. So
yeah,
where do you go from here? You've started raising capital for companies. Are you buying deals actively as well?
Oh yes, absolutely.
Okay,
I never wanted to be one of those people who's like, hey, I'll give you advice on this, but I'm not doing it myself anymore. So we are actively buying deals.
Okay, good. And so is the goal to continue to build up your portfolio? And are they I know you'd mentioned you're doing self-storage, but do you also do multifamilies or commercial deals as well? Or is it kind of any asset class as long as, the numbers work? And
for me personally, for the private equity funds that I'm an equity partner in, it's only self-storage. I've just not found any other asset class that I like nearly as well as self-storage. And that's a whole nother podcast. I could rant for an entire 30, 45-minute podcast on why self-storage is great. But that would be the only asset class I would stick with long-term.
Okay. Tenants and toilets. I mean, I'll be short.
Exactly. That's right.
Or lack thereof, I guess.
Lack thereof, yes.
And so, what's next? What is the next thing for Allison?
Next thing for me is to do what my good friend and mentor, Trevor McGregor, has been bugging me to do, which is start writing books on my areas of expertise. Obviously self-storage, private equity for real estate, which are books on private equity specifically for real estate are surprisingly hard to find in beginner terms. There are the very advanced, very good books that go into all the details of how to do a 506C versus a 506B, or Reg A versus a 107, and all that kind of thing. But there's nothing really out there for beginners. And I feel like there's a huge hole that I can fill there. I help so many other people build their brands in the thought leadership space. It's time for me to build my brand and keep on with especially with a project that I've been wanting to do for a long time, which is a book on how to raise young entrepreneurs, because my parents put so much work into doing that for me. And I get asked so often, what did your parents do to make you an entrepreneur? I feel like I have some unique wisdom to share with the world in that way. So watch for that.
Awesome. I'd love an opportunity to read that book. And age is just a number, but you're what, 25?
Yes, that's correct.
So, I mean, that's fantastic. And Trevor McGregor is how we got connected, and he's a fantastic person. I was actually on a call with him this morning. Also, one of my coaches
awesome.
and mentors, and he's, just phenomenal. So
he is. He's amazing.
Glad that we're at least connected to the same person that way.
Exactly.
So, that's been a ton of really, really good information. Just kind of sharing with us what you're doing on the private equity funds, the types of properties that you're buying, or I guess the funds that you're helping raise money for. Is there a cap of how many funds, or I guess there's probably not, but how many funds you want to raise money for or help raise money for? Is there one primary one that you focus on, or is it kind of, whoever wants it, you're there to help?
We only work with on both the thought leadership side, or the real estate thought leaders who have a specific niche to teach on in real estate, and on the private equity side, we do have a certain type of person and a certain type of company that we want to work with. We don't have a cap on the number, but we do have a cap on their idea. So for example, on the thought leadership side, I work with people who specialize in teaching high net worth, high powered professionals, especially in the minority space, who they make a lot of money, but they're not necessarily completely financially literate in terms of, they make a ton of money, but it goes out the window every month. They're still left with no assets, no ability to make it work. They just don't have the financial education that they probably should have had when they were younger. And that's a very unique niche. And that's what we look for on the thought leadership side and on the private equity side. On the private equity side, for example, we want somebody who is very focused on a specific niche in a specific area and who can stand out in their market. That's the key thing, is we want people who can stand out, who have a very unique niche. And I don't mean that you have to have a bold and brazen personality, or that you're great on video, or that you want to raise $50 million. It's nothing like that. We're primarily a marketing company. The number one thing that people need to understand about marketing, especially in a digital age, is that companies kill themselves by not specializing enough. They literally become their own downfall by becoming too broad. And the more you can niche down, the more possibility you will have of success. And we routinely turn clients away if their niche matches any other heavy hitting thought leaders in the market, or any other heavy hitting funds in their area or their industry, because we're not here to compete. We're here to specialize.
Yeah, the specialization of your craft is really where you catapult yourself, not getting
exactly
distracted by the shiny object syndrome, or trying to do too many things in real estate. Because as we know, you can make money in a lot of different ways in real estate. And so
that's right.
I think, I know I struggled with it when I first got into the investment side, is like, okay, what do I want to do? Do I want to be single family, multifamily? Do I want to wholesale? Do I want to fix and flip? Do I want to buy and hold? Do I want to do lease options? Do I want to do, there's just so many different ways, and you can make money and be very successful in every single one of them. But it's important. I truly believe that you have to pick one, and you have to just go with that. And not every deal is going to fit your mold. It's not going to fit in your box, but
very true.
You have to go through that.
And that's a very tough choice, especially for new investors. And that's also why I'm starting a podcast of my own that actually helps address this issue. How do you pick a real estate niche? Because it's not a 1 episode thing. It's not a 5 episode thing. It's something that you have to look at very, very carefully. And I don't know if you went through this, Scott, when you were brand new. I know I certainly did. It's so overwhelming to look at all those choices and try and pick even just a category, if it's single family versus multifamily, and then to pick your area. What area of the market do you focus in? Do I focus on, if it's single family, do I focus on meth houses in the Midwest? Do I focus on fire damaged properties on the West Coast? Like, the more niche you can get, the better, but it starts with at least figuring out your area.
Yeah, I think that's very true. So that's awesome. And, I really appreciate all that information. As we're coming up on time here, I'd like to kind of go into what I call the lightning round. You ready for that?
I'm ready.
All right. What is your hashtag invest this tip to keep our listeners moving forward?
For me personally, be a time Nazi. Whatever your industry, be a time Nazi to keep yourself moving forward. Prioritize, and then be like a lawyer with the tasks that you decide to do, with your prioritized tasks. Say what you're going to do it, and then track it like a lawyer with a timesheet. Pretend that you're a lawyer working for a client. You have these little 15-minute blocks that you're going to charge for. I schedule all of my tasks on my calendar, and then I track them afterward on a task tracking sheet to prove that I actually did what I said I was going to do in that hour to myself. So that at the end of the day, at the end of each hour, I can hold myself accountable for the past hour and say, was I as productive as I could have been? If not, why? So I can make the next hour better. So be a time Nazi.
That's huge. That's huge. Time is one of those things that we cannot get back. The only currency out there that we cannot get back. So that is massive. What is your favorite book, and what has the impact that been on your life?
I have a ton of favorite books, but my favorite book recently was one called 3 Billion Under 30. I think it's by Jared Kleiner. Yeah, that's it. 3 Billion Under 30. And I'm a millennial, but I tend to discount my generation quite a bit. I tend to kind of look down my nose at them, and I'll be frank. Because I had a little bit different upbringing, I have a different mindset than a lot of them. And I feel like I have a better mindset, like we all do, right? So I tend to look down my nose at other millennials like, oh my goodness, they're not doing anything important, or they're not focused on success in the long term or something like that. But this book, 3 Billion Under 30, really changed my mind because it has powerful stories of millennials making a difference, not just socially, but financially as well.
Yeah, I mean, I think it's hard to categorize millennials as being all of one, because I'll be 30 this year, and I think that still makes me a millennial. I believe.
I think it does, yeah.
But my mindset, my upbringing, where I come from, does not resonate at all with what I think of as a millennial. And so,
right, exactly.
Of course, individuals are everybody's different, but the millennials in general, I think, are, a different breed of people. I mean, with technology, they're lazier. They're not as motivated. They're more, given more opportunities just handed to them because of technology and things like that. And so it's a different world that we live in.
It is.
So thank you for that. I've never read that book, but I'm going to order it. Sounds like a good one.
You should. It's awesome.
Who, of course, I'm sure you've had mentors. You mentioned Trevor McGregor, but who's given you the best advice, and what was that impact on your life?
Well, Trevor gives me amazing information every single week, so not discounting that. But I tend to judge the quality of advice based on how many times it's come back to impact me in multiple situations. And my dad gave me a great piece of advice right before I took my first and last desk job as a 22-year-old kid. He told me not to take that job. He knew I needed to be an entrepreneur, and he knew that I should have just started at that age and bootstrapped something and climbed my way up from there. But I had the shiny object syndrome. It was a ton of money every year, especially for a kid with no degree. And I took the job, and I hated it. I was so miserable. And he got to do the I told you so, and never did, because he's just amazing like that. But I should have listened to him. I should have just not taken the job, because I would have been 2 years ahead in entrepreneurship.
Yeah, that's awesome. Well, your dad clearly had some wisdom that he was hiding, or I guess wanting to give you. So good to hear that. How do you like to give back? Raising money, how do you like to give back?
I actually like to give back with something that is most precious to me, which is my time. I run into a lot of people that are beginning entrepreneurs, and I do a limited amount of coaching in terms of real estate, business systems, how to scale a business, marketing, and that kind of thing for real estate. But I run into a lot of people who can't really afford my hourly rate to get just some advice on, how did you get started? How did you make the decision to get started? How do I know if real estate is right for me? So I like to set aside a certain amount of time to be able to devote to just the kinds of appointments that I wouldn't normally take, like just coffee with somebody who needs some advice as a beginning entrepreneur.
Yeah. And that's huge. I'm sure a lot of people really greatly appreciate that. And sometimes people just need a little tip to get them over the bump in the road to get them on the right path. So that sounds great. And finally, how can the listeners reach you? Because I'm sure that there's a lot of them out there that have no idea about raising money, but I guarantee that there are those out there that want to know and want to learn. And if they can get in touch with you, I'm sure you'll be able to answer their questions for them. How can they find you?
Absolutely. My kind of fly catcher at this point is LinkedIn. I'm very visible. I'm very easy to find. You can also go to our website, luomediagroup.com, if you want to specifically get into the nitty gritty of how can I raise money for my company right away? How can I be a niche dominating real estate thought leader? You can go to our website at luomediagroup.com as well.
Okay. And that's Luo, Luo mediagroup.com.
Yes, you got it.
Awesome. Well, Allison, thank you very much for being here today. I really appreciate you being on the show, and we will talk to you real soon.
Thank you so much for having me. It's been great.
Yeah, take care. Bye-bye.
Thanks, you too. Bye-bye.
Make sure to like, subscribe, and share this podcast to help us spread the word. Go ahead and reach out to Scott Bauer on all the social media outlets for suggestions on topics and guests for the show. And check out investthispodcast.com for more secrets and resources to achieve real success in real estate.